Welcome back to Ronel Talks Real Estate. And today we are continuing explaining property terminology. Now, for those of you who missed part one, please refer back to our previous episode. And we've tried to keep it very simple in layman's terms so that you can really understand it a lot better. So I specifically ask Johan, don't speak legal language to us. Speak it in a way that everybody can understand it. And then we also have a download, so you can go to the description where Johan and his team was so kind to prepare a download for us that's also explaining all of the terms, so you can go and get that from the description. That can help you throughout the series if we are referring to a specific term and you are not sure what it is about. You can always refer back. And then we will also be sharing Johan and Van der Walt and Hugo's contact details if you want to contact them directly. So Johan, welcome back.
Thank you, Ronel. I appreciate it.
Okay, and then so yeah, it is we try to keep it in alphabetical order. So we all continue today from terms starting with a L and onwards. So that can help you just to navigate through the episode. But Johan, I think before we kick off, maybe you can just tell us briefly what do you do at Van der Walt and Hugo?
Look, we mainly specialize in conveyancing, so that's bond and transfer registrations, notarial work where we do antenuptial agreements, and any other notarial work that needs to be done, and then commercial work and general litigation. So that's the main focus that we have at our firm, and we do estate planning and winding up of estates as well.
Okay, excellent. So like I mentioned, the contact details will be in the description field, so you're more than welcome to connect with them. Also, if you have any questions, you're welcome to pop it in the comments and I will liaise with Johan to get you a response. Then also what is important is that this whole series is educational by nature. So we are not giving advice. We are speaking generically. So remember, your situation might be different and therefore it is always advisable to speak to a professional so that you can get proper advice that is relevant to you. So let us kick off with today's episode then. Johan, are you ready?
I'm ready, yes.
Wonderful.
So the first one that we're going to talk about is a latent defect, and this is an important term that we need to discuss. So a latent defect is a hidden defect that is not easily visible during a normal inspection, such as a leaking pipe in a wall. So this is everything that the normal person would not have been able to see. That is a crack in a floor and it's covered by a carpet. That's also a latent defect. Everything that a person could not see when they view the property, that's a latent defect.
Okay, and then so you would then not really expect latent defects to be mentioned in the property condition report if it's not really known.
Look, if it's known and it's not mentioned, that's a breach of contract. So if the seller knew that there's a crack in the floor and they covered it with a carpet, that's something that should be disclosed in your property condition report, that the purchaser can go and view the defect and decide if he's willing to still buy that property with that defect. So you need to disclose, the seller will need to disclose any defects. But if it's a leak in a wall and you don't know that there's a pipe leaking, it's difficult to know that there's something that you need to to show the purchaser when he's buying that property. So, but if you know as the seller that there's a defect, you need to disclose it in your property condition report, which we discussed earlier.
Okay, excellent. Thank you. Then the next term is levies.
So your levies is a monthly fee paid by owners in sectional title, schemes or estate for maintenance, security, garden and shared facilities. So that's a monthly fee that you pay as the owner of that property for services basically in that estate.
Yeah, and I think we have a separate episode which is very insightful about all the costs that you need to know. And I think here again, it is important that you know about the levies payable so that when you are applying for your bond, that you don't go for the maximum and then you are not aware or you haven't budgeted for all the levies that could be applicable as well. So,
Yes.
Johan, then the next term is litigation.
The litigation is a legal action or a court dispute involving the property, seller, buyer, or body corporate. So this is litigation if you talk about property. I'm not talking about, if you sue your neighbor for a tree that's hanging over your wall. This is specifically for property.
Okay, perfect. And then lodgement.
So lodgement is the process of submitting transfer documents to the deeds office for registration. So that's the last thing that the transfer attorney will do before registration takes place. So that's when your file basically leaves the office and it's handed in at the deeds office for registration.
Okay, great. And the next term, mandate.
I'm going to discuss mandates, but there's different mandates. It's going to be the first one that I'm going to discuss is going to be an open mandate. So that is when a seller allows multiple agents to market the property, and only the successful agent will earn commission when that property is sold. The next one is going to be a dual mandate. That is when a seller allows two estate agents to market a property, and again, only the successful agent will earn commission on that transaction.
Mm.
And the last one that I want to explain to everyone is an exclusive mandate. That is when the seller appoints only one agent for a specific period to sell a property. So it's only one agent.
Okay, and Johan, I think it's also important that when you decide to sell your property and you want to appoint an agent, that you do it through a mandate, that you just don't do it verbally and then later on there could be claims or anything against you.
Look, you need to, it's actually a requirement, it's law to sign a mandate before an agent can market your property. So you need to make sure, even if it's a dual mandate, an open mandate, you need to make sure that there's a signed mandate before the property is marketed. Yes.
Excellent. And then I think terms that we often hear is market value and selling price and replacement value. So maybe we can just explain those.
Yeah, so the market value is the estimate price a willing buyer would pay a willing seller under normal market conditions. So that is the market value. I think we've discussed the sworn evaluator that will give you a value. We've discussed that already, but if you look at the sales value, that is the actual or expected selling price achieved in a sale transaction. So that's the sale value. And then replacement value, and this is where you talk about insurance. That will be the estimate cost to rebuild the property if it is destroyed, usually for insurance purposes. So that is when you've got insurance on your property and there's a fire and the house is destroyed. your replacement value is the value to rebuild that property to its original, what it looked like originally.
Yeah, no, and I think that is sometimes where there can be a lot of confusion because people hear about the market value or they think in terms of what they paid and they do not realize that the replacement value might be a lot higher. And then when you do have an insurance claim, you are underinsured. So I think it is important to really understand those terms and then to also know that market value and sales price are not always equal. It can be that your sales price that you get less than the market value because your property is maybe not in a good condition, or it can be vice versa, where you can get a higher price than what the market value is. So again, it is important to understand those different terms. And then, yes, Johan, you want to add something?
Yeah, I just want to explain, and this is where replacement value comes in. It's always a higher value than the price that you bought the property for. And the reason for that is insurance will always include your architect's fees for new building plans. It will include your demolition fees to um, to to break down the house, demolish the house, and to rebuild that house. So that is the reason why it's more expensive. There could be more expenses for a replacement value, but this is just to explain that it's always higher than the value of the property that you bought it for, the sales value.
Yeah, I think that is important to know that. And then what about the notary?
So the notary is a specialized attorney authorized to prepare and register certain legal documents, such as servitudes and antenuptial agreements. So that's your, before you get married, you sign an antenuptial agreement. It's also called an ANC. I think we've discussed it earlier. That is something that only a notary can sign and register in the deeds office.
Okay, excellent. And then occupation date.
So occupation date is the date that the buyer or tenant may move into and use a property. So this is specifically occupation date when there's an offer to purchase and the parties arrange a date before registration to move into a property, then you will call that the occupation date. So that is basically the same as a rental agreement, the day that you will move into that property, into the apartment, whatever property it is.
Okay. And yeah, so it could be that your occupation date and your registration date differ.
Yes, that is important to note that when you sign an agreement, you always need to complete the occupation date. If you don't fill in an occupation date, most of the time, the agreement will stipulate that occupation will be on date of registration. But if you need to move into the property because you gave notice on your previous property where you're moving out, you need to make sure that the agent put an occupation date in your agreement so that everyone knows when you are supposed to move into that property, if you're the buyer or the tenant of the buyer.
Okay. And then going hand in hand with that, your occupational rent.
The occupational rent is rent that is paid when a buyer occupies the property before transfer is officially registered in the deeds office. So that's what I explained. If you move into that property and you live in that property for 2 weeks before date of registration, the buyer is supposed to pay occupational rent to the seller for that for the 2 week period.
Okay. Yeah, and then occupational rent is obviously different from when you are just renting a property as a tenant.
Yes, it will be different, yeah. And it's always it's supposed to be a short-term um, arrangement. Normally it's 2 weeks or 3 weeks or it's a month before date of registration. 90% of the contracts will stipulate it's on date of registration. The purchaser or the buyer can take occupation of that property, and then there's no occupational rent payable to the seller of that property.
Okay. And then offer to purchase. I think we hear that a lot, also known as a OTP.
Yeah, so offer to purchase is a written offer made by a purchaser to purchase a property. And once it's accepted, it becomes a legally binding agreement. So the purchaser will make an offer on that property, and only when the seller signs the agreement is the valid agreement.
Okay. So that is basically where it goes from an OTP to a contract or an agreement once it's signed and accepted
Once
by
it's
the seller.
signed, once it's signed, it's a contract between the parties. So if you only make an offer, it's an offer to purchase. You still don't call it an offer to purchase, but as soon as it's accepted, it's a contract. It's a
Okay.
legally binding agreement.
Excellent. And then patent defect. I think we've discussed latent defect. Now we have patent defect.
Yeah, so a patent defect is a visible or obvious defect that can be identified during a reasonable inspection. So as I mentioned previously, if there's a small crack in the wall, and if you go and view the property, that is something that any reasonable person should have been able to see. That is a patent defect. So that's something that also needs to be disclosed, unless if it's a small chip in the wall or something small. But I would prefer that everything that is, even if it's patent and it's a problem, rather just disclose it in your property condition report.
Yeah, I think it's all about transparency. The more transparent you are, the less problems you might occur later on.
Definitely.
Okay, then power of attorney.
A power of attorney is a legal document authorizing someone else to act on your behalf in legal and financial matters. So if you are not willing, if you're a buyer of a property or you cannot sign transfer documents, you're overseas, or you're in hospital, you're going to be in hospital for a certain period, you can sign a power of attorney for a family member, a friend, a business partner to sign certain legal documents on your behalf. And then we call that a power of attorney.
Okay. And then the next one is the Property Practitioners Regulatory Authority, or the PPRA.
The PPRA is a regulatory body overseeing estate agents and property practitioners in South Africa. Now, a estate agent and the property practitioner is basically the same thing. It is just different terms. But that is the regulatory and the legal body overseeing everyone in that space.
Okay. And then I think we have discussed the FFC certificate that your agent needs in the previous episode. So therefore, it's also important that they do not only have a valid FFC, but that they are registered with the PPRA to act as an agent.
Yes, definitely.
Okay. And then property transfer.
So property transfer is the legal process of changing ownership of property from the seller to the buyer. You call that a property transfer, and that's the whole process from the date that you receive your offer to purchase or your contract as an attorney up until date of registration. The whole process, it could be a month, 2 months, depending on the transaction, and that is what you call a property transfer.
Okay. Next one, property valuation.
The property valuation is the assessment of a property's estimate worth by a qualified valuer or estate agent.
Okay. Okay, and there again, it needs to be somebody who is authorized to do valuations. It cannot just be anybody on the street.
Yes, definitely.
Okay. And then a purchase agreement or a sales agreement.
So a purchase agreement is a legal contract setting out the terms and conditions of a property sale. So offer to purchase, your purchase agreement, a contract, it's the same thing. If you sign that and both parties sign the agreement, the purchaser and the seller, it is a purchase agreement, it's a contract, it's the same. It's a different name, different terms, but it's the same contract basically.
Okay, thank you. And then the rights clearance certificate.
Certificates from the municipality confirming that municipal rates and taxes are paid up before transfer can proceed. So that is where you request, part of the transfer process, you request figures from the municipality to make sure that as soon as transfer takes place, there's no amount due by the seller before date of registration. So we as the attorneys must make sure that all the rates and taxes are paid up before registration can take place. So the new owner, the purchaser of that property, will go back to the municipality and they will get their own account, different account number on that property for rates and taxes. So we need to make sure with the certificate that everything is paid up until date of registration.
Okay. And then we have touched on it a little bit, but rights and taxes.
It's municipal charges for services such as roads, refuge, removal, sewage, and property rates. So that's the combination of all your expenses on that property that needs to be paid to city council, to the municipality. So that is, as I said, your water that you use every day, your electricity. If you have a prepaid meter, it's not going to be on your rates and taxes account. You're going to pay that separate, but your water and all your sewage and everything else will be on your municipal account.
Okay. Yeah, and then you must also look out for our episode where we are discussing the costs in detail. There we will discuss this in a lot more detail. Then Johan, the rental agreement.
So the rental agreement is a legal contract between the landlord and a tenant outlining rental terms and obligations. So your rental agreement is basically you get a sales agreement where you sell a property, then you get a rental agreement where a tenant is going to rent a property from the owner of that property.
Okay. And then sectional title. I know in the first episode we discussed full title, but now you could just explain sectional title to us.
So sectional title is a form of ownership where individuals own a section, such as a flat or a townhouse, and share common ownership of the common areas. And that is, if I can explain, it's a flat on the third floor, it's a duet. If you live in a duet where there's two properties on a earth and it is connected, even if it's not connected, if it's registered as a sectional title, that will be a sectional title. So it is a property where you live, where there's a common area, where you share that common area with your neighbors. Then you call that a sectional title.
Okay, excellent. And then I think we have touched on it a little bit, but maybe just also the selling price and the asking price.
So the selling price is the final agreed price at which the property is sold. And the asking price is the amount the seller initially wants for the property before negotiations. So this is typically, let's say you want to sell your property for 2 million and that will be your asking price. And then, you get a buyer that's willing to buy that property, but he's only willing to pay 1.9 million. That will be the selling price then. If you sign an agreement for 1.9 million, that will be your selling price.
Okay, excellent. And then servitudes.
So this is something that we discussed earlier that only a notary can register on a title deed. So that is a legal right allowing someone else limited use of part of a property, such as access to roads or utility lines. So that is the best example to explain on a servitude is if you live on a farm and one of your neighbors need to drive through your farm to get to their farm, the notary will need to register a servitude to make sure, a right of way to make sure that this owner of the property at the back is allowed, legally allowed, to drive over his neighbor's farm. And that is what you call a servitude.
Okay. And then, say, for example, I want to go buy a property now. How would I typically know if there is a servitude? Is there like a document that I can request, or do you just ask the seller and hope they know? Or how would you typically know this?
Look, it's always wise to, when you buy a property, to ask for the title deed. In the title deed, you will get all your servitudes that's registered on your property. It is noted in your title deed. So it's always wise. And there's different types of servitudes that can be registered on a title deed. So it's always wise to request a copy of the title deed to make sure that you know exactly what type of servitudes, if any, is registered on your property.
Yeah, I think that's very good advice there. And then what about suspensive conditions?
So your suspensive conditions is the conditions that must be fulfilled before the sale agreement becomes fully binding. And the best example is probably going to be your bond approval. So it's a suspensive condition that there must be a bond approval if you buy a property for R1 million for at least 800,000 Rand by a certain date. That is called a suspensive condition. So there's no legal and binding agreement unless the suspensive condition is met.
Okay. So then if you have this suspensive condition and it is not met, does the contract then automatically become void or?
Yes, it is. So it will be void, but only if it's it's going to be difficult to explain so that people understand. But if you apply for a bond and you don't get a bond, then the contract is void. But if you buy a property and you've got a date that you need to get a bond, but you don't apply for a bond, then the seller can always still put the purchaser on terms for breach of contract if they did not apply for a loan. So, but your suspensive condition will definitely be void if you applied for a loan and you did not get a loan.
Okay. And then you have touched on it now, but just explain the title deed to us.
The title deed is the official legal document providing ownership of that property. So if you have a title deed and your name is registered on that title deed, you are the owner of that property. So that shows who's the owner of that property.
And then maybe just also explain to us if you still have a bond over that property, will the title deed then still be with the bank? Or at what time is it only when you have repaid your bond in full that you receive the title deed? Or maybe just explain that process to us.
So if you buy a property and you register a bond on that property, the bank will keep your title deed as security up until the date that you pay the full amount outstanding on your bond. And as soon as your bond is cancelled in the deeds office, the bank will send your title deed back to you. So you will only have your title deed if you don't owe money to any bank. If there's no bond registered, only then will you have the title deed in your hand. Otherwise, it will be with a bank or wherever you give that title deed for security reasons.
And if you paid up your bond, would the bank automatically send you the title deed, or is it something that you need to request?
No, the bank will never send your title deed. You first need to cancel your bond. So the bank will appoint a cancellation attorney, and only once the bond's been cancelled in the deeds office will you receive your title deed from the attorneys, from the bank's attorneys. So you need to notify the bank that you want to cancel your bond, and only then will you receive your title deed.
Okay, and then if you paid cash for your property, then you will have your title deed from day one.
Yes, then your transfer attorneys, after date of registration, they will hand over your title deed to you.
Okay, excellent. And then town planning.
So town planning is the municipal rules and zoning regulations controlling land use and property development. So that's got to do when you buy your property. For instance, if you own a property and you've got business rights, your zoning will be different from a house in another street around the corner. So that is your town planning, and you will get a town planner to assist you with your town planning.
Okay, and then just while you mentioned on zoning and business rights, I think there's also often a lot of issues where people buys a place with the kind of understanding that it has business rights, and then later on they realize it doesn't. So if you plan to do kind of some business activity or so, how can you ensure that you do have the necessary rights to basically do those activities?
So you need to make sure your business rights will not be noted on your title deed. So you will not know if you buy a property, if there's a business right on that property. You will need to ask the seller or the agent to get info from the municipality, and on the file at the municipality, you will get a notice or a letter stating what is the land use of that specific property and the zoning of that property. So that is not something that you will see in your title deed. You will need to request that. And only the owner of that property can request the information from the municipality.
Okay. Yeah, so I think that is another very important point that you need to consider when you plan or to buy a property and not just use it as a normal residential house. Then also, I think we have touched on it a couple of times, but just your transfer attorney.
Transfer attorney is the attorney appointed to handle the legal transfer of ownership and registration in the deeds office. So your transfer attorney will handle the process from date of receiving the offer to purchase up until date of registration in the deeds office. That will be dealt with by the transfer attorney.
Okay. And then your transfer duty.
So your transfer duty is the government tax payable by the buyer when purchasing property above a certain threshold. So that's basically your tax that you're going to pay to SARS when you buy a property, and the threshold at this stage, and could be higher in future, it could be lower, is 1.210 million rand. So any amount below that, there's no transfer duty payable.
Okay, excellent. And then, like I mentioned previously, remember to also have a look at our episode where we're discussing the costs in a lot of detail. That is a very, very insightful discussion. So don't miss that one. Johan, then Voetstoots.
Yep. So that is a clause in your offer to purchase Meaning the property is sold as is, with all visible defects unless the seller intentionally hide defects. So if you sell a property, it's always easy to tell people, but I sold the property Voetstoots. But it's still the seller's responsibility to show the purchaser exactly where there's defects in that property. If you knew that there was a defect in the property and you did not disclose that defect to the purchaser or to the agent, Voetstoots will not be applicable. That is only if you did not know that there was a defect in the property.
Right. And then the last term for today, a will.
So a will is a legal document stating how a person's assets and property should be distributed after death. So that is typically something that you will sign, hopefully as soon as possible. It's always wise to have a will, even if you think you don't have enough assets. It's always wise to sign a will. That is the document that will, at the end of the day, when that is registered with the master, that will show everyone around, all your heirs, all your family members, who will inherit your assets, all your properties. Even if you don't have much, it's always wise to have a will.
Okay. And then if, for example, you now buy an additional property as an investment property, do you need to update your will or is that not necessary?
A will is something that you need to update at least once a year, maybe once in 2 years. Every time you buy a property, every time you get married, if you get children, if they are minors, you still need to get a will. That is very important. You always need to make sure that it's updated with all your property so that there's no confusion after date of death on what needs to happen with your assets.
Yeah, no, I definitely think that is again like in something that can be very controversial. So rather get your will in place and make sure that you keep it updated. So that is all that we have for today. Like I mentioned, we have a first episode where you can have go listen to all of the terms that we've discussed there. And then we will also have a separate one where we will be discussing terminology that's specifically relevant to investment properties. But Johan, I want to thank you for your time and sharing all of your knowledge and wisdom with us. It is really appreciated. And I'm looking forward to the next episode where we will be discussing further topics.
Thank you, Ronel. Enjoy your day. I appreciate it.
Thank you so much.